I wanted to take a look at SoFi stock and do a value investing look at SoFi stock and answer the question, is SoFi stock a buy? Thing is, they just released their numbers just a couple days ago, and the SoFi stock continues to trend lower and lower. What is SoFi stock worth? That's the first question. But then you have to look at the variables that are affecting SoFi stock right now. Their losses look like they're probably going to grow further, and this is what's really concerning Wall Street. But at the same time, SoFi stock has turned a profit. But what would you pay for that profit, especially considering the risk that we might see bigger losses in SoFi Technologies, which would pull SoFi stock even lower? That's what I wanted to kind of break down. First and foremost, you also have to keep in mind the economy. Take a look at some of the biggest players out there: Disney, Starbucks, Yum Brands, McDonald's, Uber, Tyson Foods. They're all dumping because the consumer is contracting more and more. Interest rates are going to remain higher for longer, which actually plays into SoFi stock because of their book value. Because eventually what happens is the Federal Reserve shifts gears and lowers interest rates, which means the assets that SoFi stock has on the books increase in value, which gives them a little more liquidity to work with for loans and things like this. They don't have to reserve so much because the price of what they're holding already improves. So that is a benefit right there that you need to kind of keep in mind. But let's jump in. I want to show you a couple charts on SoFi stock and show you what I'm looking at. Let's jump into the computer. Here's a 4-hour chart on SoFi stock. At the earnings, shooting up all the way up to a little over 840, falling all the way down to what, 660? That was a pretty decent sell-off after the initial spike on the news. We're sitting at $7 for SoFi stock. I expect we'll probably see a continued move lower, and it really boils down to how much are you willing to pay for future earnings, but also keeping in mind that the economy, SoFi stock is probably going to see a bunch more losses. Their loss is sitting right around 5%, greater than 5%, and I think they go beyond that because of the economy. Then you have, right now their assets are probably priced a little bit too low because of the interest rates are as high as they are, but the Federal Reserve will flip that. That's going to save SoFi stock in the future. Their book value will improve. But how much losses will they take in the process? Here's a bigger look at SoFi stock. To see this to go back down to $4, that's not out of the question. It's a growing company, but they're also a bank, which means their costs are a little higher. They're also competing with just so many different companies. They're competing in every category they possibly can, including Robinhood, brokerages, banks, you name it. Because of that, it's almost as if they've sort of lost their way in sort of a singular viewpoint. At the same time, the spread is going to shift out of their favor for what they're paying their for the asset or their liabilities, which would be deposits, versus what they're getting from loans. That's going to be a big factor as well, especially if we see a shift again with interest rates. Moving forward, this article here came out of Dow Jones Newswire. It really kind of broke down a lot of what's going on. Wall Street right now, despite the profits, is really kind of worried with SoFi stock with regard to its loss ratio. Now, the economy. And for me, everything starts with the economy. A stock, I don't really care much about the stock per se individually. I care about the whole economy. This economy is starting to grind to a halt. SoFi stock will take losses. Those losses will increase because the economy is going to grind to a halt and they're going to see bigger defaults. That is where everything starts with me. We are at the peak. Take a look at the stock market. We are at the peak. So on this particular stock, it's at the bottom when the rest of the economy is at the peak. That's where I look at SoFi stock and I'm like, yeah, no. Here's a good look at the U.S. 10-year Treasury yields. We're probably Next week we get inflation data, and this could be still very damaging to the stock market because the past 3 months we've gotten higher than expected inflation, which means interest rates will pop back up. The stock market, which we're seeing huge brands selling off at this point, that will really start to pull things down. And then the momos are probably going to sit there and finally get on board and realize, hey, listen, the stock market has peaked. And at this point, we're looking downwind. The Federal Reserve won't have the ability to lower interest rates for 6 months. Because of that, the consumer is going to be constrained even further, paying higher on their credit card debts, not getting new car loans because they're simply overpriced, and then you've got the interest rates being too high. This is going to affect the economy, broader speaking. People are going to start to get laid off. Because of that, companies like SoFi will take a hit. Let's break down real quick. These are in billions, so it's in a decimal point. Revenue was a decent little increase in the revenue. This, from a revenue and earnings perspective, SoFi wasn't really disappointing as much as looking under the sort of the hood and looking at the losses. Projected revenue, 2024, 2.41 billion, then 2.277 billion for 2025. I really wanted to focus on 2026 because this is really where anybody who's holding on to SoFi stock, that's where you should be looking for 2 years from now. In the meantime, there's probably going to be a lot of lost opportunities. That time is money. Now, SoFi stock slightly overpriced considering 2026 earnings. So that if they hit their revenue projections, this economy is going to slow down. That will affect their revenues. It's affecting bigger players now, McDonald's, Starbucks. Wanted to kind of look at projected earnings per share going out to 2026. How much would you pay for 46 cents projected earnings per share and hold on to it for a year and a half? At the end of 2025, you're looking at the next 4 quarters, that 46 cents. And that's really what you're asking is, how much would you pay at the end of 2025 for SoFi's earnings per share if the future projections are 46 cents? Given a 5%, you're looking at about $3 in 2025. You take 0.46, divide that by 0.05, the 5% that you're looking for, that gives you about $3 in 2025. Until then, SoFi stock is overpriced. I broke this down, kind of looking at it where it is. SoFi price trading at 7%. You're looking at a 1.13% yield. Let me give you a better investment opportunity right now. United States federal treasuries are trading at about, the 10 years trading about 4.5%. The Federal Reserve will not raise interest rates at this time. They're just going to wait out and hope that inflation gets to that target rate, declining at 2%. They'll get there because the economy is going to contract, grind to a halt, because they have to keep interest rates higher till after the election. What happens next? They lower interest rates. They do so rapidly because they'll have done too much damage, which would affect SoFi stock because their revenues won't hit, neither will their profits. What happens when they lower those interest rates? The Federal Reserve lowers those interest rates. Anybody who bought in at 4.5%, the price of those yields goes up. Where am I putting my money right now? TLT stock. I'm putting a lot of money into TLT stock because when the Federal Reserve lowers rates, TLT stock, based on price for the 20 and 30-year Treasury yields, goes way up. I'm looking for 25 to 50% over the course of the next 12 months on that trade alone. TLT stock and TMF stock. That's how I break down my analysis. That's how I make my trades based on the economy, looking at the economy, looking at these stocks as the effect, not the cause. The cause is the economy. If you want to find more content like this, make sure to hit that like and follow button. I've got my free email newsletter down there below for Substack, where I break all this kind of information, stocks to buy, looking at the stock market crash that we're likely beginning to see right now, what will happen with it, interest rates and inflation over the course of the next couple of weeks and months. Make sure to hit that like and follow button. Get the link on the Substack newsletter. We'll see you in the next video.